Today is Sunday, July 26th. This is the video that covers Friday, July the 24th. And you can see that the McClellan oscillator has taken another dip down. Now it's just below the zero neutral line. So we've spent since the 12th of July rather, just going over and under the neutral line, really going nowhere. The stacked volume looks like this, where Friday was the weakest volume of the day, and the number of shares advancing and declining. We have 2 days in a row now where we have the decliners leading the advancers. The A to D volume chart, let's look at this. When we had a market that was sort of flat back here in January, the beginning of the year, we had very little difference between the highs and the lows in the advancers and the decliners. Then when the market started to drop, we started to get these wild swings of big days of advancers, big days of decliners. Now that's coming more into a range of stability. But if you look at what's happening here, it's very similar to over here. So we can expect really to see the rest of the summer and maybe into early September just sort of going flat into a channel. So we can take a look at the charts and see if we can confirm that. The summation index looks like this. Remember, the summation index tells us really where the market might be going in 3 to 6 months. Let's take a look at some further back portions. So I've just grabbed a little screen grab here, and you can see that the advancers and decliners, when they started, the summation index rather, when it started to decline back here, it preceded the drop of the market, which could have started here, but it got choppy, but it certainly started here. So this is roughly October of, and this is December, so a couple of months ahead of time. Now this one here, this pre-signaled this drop in the Dow Jones when the summation index started to turn down, which was about the September time frame. The market really started to drop in the middle of October, about a 45-day time lead. So we're not talking 3 to 6 months. We're talking about a little bit more closer in terms of future predictions. Now the summation index has started to turn back up again. So we had it drop, now it's moving up. So again, I think that confirms that no major moves are coming. Let's take a look at the charts. The Dow Jones Industrial Average fell below the 8 EMA. So now we haven't talked Ichimoku in a while, but now we've got this. It's not quite a golden cross here because it's two different well, no, we've got the 50 SMA and the 200 SMA. So forget this dashed line, which is the 50 SMA. So we got the 50 EMA and the 200 EMA, and they are crossing in a bullish fashion. So let's keep an eye on that. But remember that we didn't come down to test that when that happened with the S&P. So 78.6% of a retrace back to our Dow high is where we seem to have met resistance. This arrow reminds me that we talked about, a channeling going nowhere market some 10 days back, and that appears to be what's happened. So let's look at the Chiku span now, which got support on this candle. It could drop a little bit on Monday and still find support on this candle. By the way, what are the futures doing? The futures have been going down since about 10 o'clock on Thursday night, and we've lost about 40 points. A bit of a rebound here, but look at the volume. I mean, I don't put a lot of faith in futures trading because there's just no volume. Here we saw this massive chop on Friday, and I think that that's what we're going to expect for the rest of the week. The NASDAQ, it also had a pullback on the day, ended up a little bit higher than where it opened, but it did open quite a bit down. Let's look at the Ichimoku there, and let's do this. Let's pull up everything. And so we've got lots of room for support on the Chiku span, on the candles, and the 50 SMA and EMA are just both down here somewhere, but we also got the 138.2% after a pretty strong double rejection at 150%. The volatility index is staying in this choppy zone, and the SPX, we're still above this trend line. We're still in this area here where, let's just get rid of this, where the cloud is starting to come in play, and the Chiku span is below the candle. So unlike the Dow, where the candles were going to provide support for the trailing price indicator, the Chiku span, now they're providing resistance. So we're going to keep a look here. This would be the resistance point. So very small upside tomorrow in the market if the Chiku span is going to run into resistance of this candle. And then there'll be just a little bit more the next day. And then we have a possibility, if the Chiku span is our indicator, of moving up quite strongly on Wednesday. Apple finished below 370, but look what's happened 2 days in a row now. I tweeted this out on Thursday. We had perfect support at 138.2, and the Fibonacci's that we've drawn and have been following for quite a long time now, we had really good support at 127.2%, and both of these days were strong volume. This is where institutions were getting involved in selling and then buying the dip. So they were encouraged by the support at 138.2, and then they were encouraged again at 127.2. So these are pretty strong Fibonacci's. This red line is my break-even point on the short puts that I've sold that expire in 2 weeks, which I'm still holding on to. Caterpillar, I thought that it was going to go down. It's just channeling sideways after rejecting or being rejected at this double top here. So this top that we experienced in June, we hit it again in the middle of July, and we're getting resistance there. Home Depot, still a pretty darn good strong stock. I rolled my 250 calls because I think that the whole market's going to be under pressure. I didn't want to let all of my Home Depot stock get taken away. My 245 calls and the stock associated with them were taken. So that brings my cash position up to about 20% overall. And, I'm holding on to those. I don't know if it's next week or 2 weeks, but anyways, it's going to bring me another $1,400 or $1,500 in premium. And for the rest of July, I'm quite happy with being quite conservative with Home Depot. Whirlpool, this is a 5-minute chart, so let's go to the daily chart, and we can see that we hit this double top from this high. We've got this top, which is a target, but we just were rejected. Once we closed right at this high here on Thursday, and on Friday we fell below it. But Whirlpool has given us quite a jump. There's a gap that we need to draw there and take a look at some point in the future. So we're up to 8 minutes, and I'm going to close it now and just say that I think that we are going to see the Chiku span under heavy resistance here, and looking at the cloud to provide support. And then we've got this massive little valley here, and stocks don't trade very favorably with valleys. They don't keep moving up when you've got a big valley here. They tend to do sort of a leap and then come and meet the cloud where it moves up to meet price. So we might see something like, well, that means just more channeling, and that would take us into the end of the year. We have an election coming up, don't forget, in November, and the market does not appear right now to be afraid of a Biden administration. If it is, then it is suckering us in and lulling us into believing that everything's good. Mind you, the Fed is ensuring that everything will be good, but there are just no strong fundamentals underlying the market. The Fed owns the market right now.